Microphone headset test. Okay, everyone, good morning. First off, this video is being made late in the evening on Maui. Thursday's stock market session was very interesting one. Our entire market model, all averages across all sectors, are now under sell conditions. Thursday was extremely ugly. It started off with Russian sanctions, and then it went into a big sell program, one of the larger ones that we've seen in quite a while, hit the market all day long on Thursday. What makes this sell-off pretty bad is because we already knew that we had a broadening formation. We were rolling over with plenty of distribution, and I warned for weeks now, I've been warning that this market looks to be in some serious trouble up here as the crowd has gotten very bullish. There are no bears. And we have negative internal divergences everywhere with some horrible macro numbers. And we all know QE is ending in October, and the United States dollar has been rallying like interest rates are going to rise early next year instead of later next year like they are saying. So once again, follow price, not what people say. So the Fed says that rates are coming later. I think the Dallas Fed Fisher FOMC guy is probably right. They're coming early in 2015. But the market sold off hard, and the crazier thing was is that the day before, it looked like we were right back on solid footing. Wednesday's session was bullish, and not only that, the biotech stocks all broke out to new highs and did it on strong volume. And it was across the board. You name a leading biotech stock, it had a big move on Wednesday, from Biogen to Celgene to Alexion Pharmaceuticals. I mean, it was just all over the place, and the biotech index looked great. That triggered a ton of buy signals, and we took them. We did keep them smaller than normal, and boy, oh boy, did it pay off. But the good news is for us is that we had two new long positions kill it today, which is crazy, and that doesn't rarely does anything work out in our favor like that. AGIO was up almost 7% today, and Rent was up almost 9% alone today, while the market was off right around 1.5% across the board, depending on what you're looking at. But the bottom line is that the Russell 2000 death cross looks like it's good. As soon as we sold off below the 5200-day moving average, we followed through with more selling, and even though it looked like we were trying to find support, we failed that miserably, down 1.60% today. So the market is very, very shaky here. I've been telling new investors that if you want to know a time in the market to not invest, you are currently in it. Been saying that for a couple of weeks now, and today proves it. With the breakdown below the 50-day moving averages and further deterioration by the Russell 2000 under the 5200-day moving average, obviously I want to increase my short position hedges. That means SQQQ, QQQ, whatever, is going to be a 5% add. Why not 10% or more? Because we still don't know if the world is done with their experiment yet. China could still have a round of quantitative easing. Europe sounds like it's definitely done. We sound like we're definitely done. But until we know that these guys are out of the market, we could easily reverse again tomorrow and have a big up session and reverse this strong signal. However, this signal looks good. But at the same time, I've been telling everybody that we're not oversold yet. The good news is we're getting there. We are still, if you look at these two, I pulled up the TSV, which is in the middle window, and MACD, which is in the bottom pane. You can see on the Russell 2000, both are still solidly heading lower. The NASDAQ is solidly heading lower. The S&P 500, both of those are heading lower. The Dow Jones Industrial Average, they are all heading lower. It appears that MACD wants to try to round out, you would think, but if you look closely, it isn't. It's still heading lower. Not only that, where you do not see it on the chart here, but I also follow a 2010-20 stochastics and the Walters RSI 14. None of those on any of the major market indexes are oversold. So until we get oversold on these oscillators, and then we start to see a floor develop and then a follow-through day, which comes on the third or fourth day of a rally attempt, I'm not interested in going long stocks here. And on that note, there really wasn't any signals. CELP did give a pocket pivot point signal. This was the most, I guess this was the best signal out there for stocks overall, and it is an oil and gas stock. So if you got to get long anything, which is ridiculous to me in this tape, this is a good one. And as you can see here, stochastics and Walters RSI not present, but MACD rounding out, TSV trending higher. That's what we're going to want to see for the next run of longs. Now, If you read the new long positions before the market opened, you'll see that I did not take PCRX long as it was gapping down pre-market. Good thing because it only got worse. But whenever you see leading stocks break like that, that's a big, huge red flag. Also, a recent new long position that was looking beautiful right after it began moving up is now triggering a full sell position at one point intraday. It just absolutely fell out of bed. So we're dealing with a very, very tricky market environment. Not tricky for us. We know it's time to be cash. Going into the day before, we were over 72 or 73% in cash. After this morning's opening bell, which is Thursday still here on Maui, we were approximately around 62% cash. And after the Thursday's close, by the time our orders are executed in the morning, we're going to be around 80% cash with about, I'd say about, I think it's going to be 6 to 8% of our portfolio in hedge leverage short positions. So it's definitely not a time to be long, but we are going to be looking for a floor because until interest rates actually start rising, corporate profits are too strong. There might be another round coming up. We are also in the going into the fourth quarter of a sixth year of an 8-year presidential election cycle. This is normally extremely bullish, and fourth quarter is always the most bullish for stocks, and especially in the 6th year of a presidential cycle, so you don't want to fight that. And if everybody notices, that that cycle doesn't normally happen till later on in September, so we're not there yet. We're in the middle of the worst week of the stock market, and that is living up to its names. In 4 days, the Nasdaq's down 2.5%. The Russell 2000 is down 3.20%. You could have gone short going into Monday and really banked. Seasonality has worked pretty well this year. We'll see if it continues. Thank you.